ended up getting 3 CCJs.
No way.
At the time, I did not care about CCJs. I did not think it was anything deep.
The most negative is always going to be adverse credit. So that's going to be your missed payments, your county court judgments, and your defaults. Those are going to be
The hard hitters on it.
the hard hitters.
Is it true that whenever someone runs a credit check on you, it reduces your credit score?
Absolutely not.
So that's a myth that's always been told throughout my whole life.
Yeah, massive myth.
Earning more money guarantees loan approval.
Absolutely not.
Why not?
Because you make more money than me doesn't mean that you manage your money better than me.
If I make a statement here and say those services are dangerous, what's your opinion towards that?
I agree.
Why?
I agree, absolutely. Like I said, if they're unregulated, it means that they're not taking the individual into consideration. One of the easiest things, to be honest, is being registered on the electoral roll. Bottom line is, if someone's going to give you access to their assets or their money, they want to know where they find you if they need you to pay them back. And the electoral roll does that. And then the third one is appealing any adverse credit. So if you've got a default or a CCJ, even a missed payment, to be fair, have a conversation with the company. Companies have a duty and an obligation to report on the credit and referencing agencies being available to everyone. If it's credit, something can be appealed, something can be removed, something can be improved, let's say. And if it's insurance, there's definitely a policy available for everyone. And don't underestimate how valuable or how important they are at any point in your life.
What is going on, people? Welcome back to the CEOCAST, the number one podcast for showcasing business entrepreneurship. Now, today we've got a very special guest in front of me, and it's going to be a very important topic that's going to help everyone in their lives. Wherever you are in terms of your journey, this is going to be one that helps you. So, Ella Weinberg, thank you very much for joining me on the podcast. We're going to be talking everything about credit, insurance, people's credit scores being messed up, how we can fix it, and so much more. So first and foremost, how's your day going? How's everything?
Yeah, it's been good, thank you. Thank you for having me. I know that we've been talking about this a long time, but yeah.
It's actually been years.
Yes, hasn't it?
Yeah.
If it's good to get it locked in.
Because when I tried searching for your number on WhatsApp, or I just searched for the name Ella.
Yeah.
And it must have come up with your old number or something.
Yeah.
And I think that the message was in 2022 or something
Yeah.
like that. But, you know, everything has its timing, and
There
here
we
we
go.
are today.
And
now.
probably best time now than it was before.
Exactly that. But to start this off, how would you introduce yourself to people who are watching?
I classify myself as an award-winning financial consultant. I specialize in insurance and specifically personal finance, but niching down majority on credit. So helping people with credit management, let's say.
And the follow-up question to that is, why is it that people should listen to you?
I think based on my experience and expertise. So I've been doing this coming up to 6 years now. Specifically in insurance, I've always been one of the leading female advisors within the industry. I've got a large client portfolio that ranges basically from, you know, students who have just come out of university, who are sort of like starting on their career, to then mums, people at pivotal points of their life, buying a property, getting engaged, getting married, etc., to then people the other end where they've amassed like large amounts of wealth and therefore obviously just want to make sure that it's protected. So I think definitely experience, expertise, definitely when it comes to credit as well. I don't think there's anything that I haven't seen. You know, like as we were speaking about on my way in here, I'm looking after a client at the moment that's got a £38,000 CCJ, and that's the thing, it's not to say that that client doesn't have any money. Like, they're doing extremely well for themselves, but just circumstances happen. So yeah. I think as well, what's nice is I'm a consultant who is not do as I say, but don't do as I do.
Yeah, okay.
I kind of appreciate where clients are coming from, their background, really want to take them into consideration. Finance and, you know, emotional well-being and mental health go literally hand in hand. And I think that's always my first priority when it comes to a client.
So the way I introduced this podcast, I said that this podcast can be useful for everyone. Do you think in today's world, everyone needs to listen to this in terms of it applies to everyone, regardless of where you are in life? Absolutely.
I think the reality is if we study a lot of people who have developed their riches and then turned riches into wealth, a lot of the time it's being able to leverage other people's money. So when we think about credit specifically, that's exactly what it is. It's how responsible you are at managing other people's money. Yes, of course you can save. Yes, of course you can build businesses that, you know, accumulate large amounts of profit, but you're going to get there a lot quicker if you're able to leverage someone else's money first.
Yeah.
And then I think from the insurance perspective as well, is insurance is the way that you keep the money that you've got, as well as giving you access to money when you need it. Who would want to turn that down at the end of the day? And I think if we think of our number one skill set or our biggest asset, it's our ability to earn an income. That with credit and insurance, the two go hand in hand.
No, fairs. There is one thing I want to say as well to the people. This podcast is not financial advice, nor is it going to directly help you in any way. You got to obviously apply it to your situation and see what's what. I'm not advocating for credit, People can do what they want. Don't go and pull out a whole bunch of Amex cards after this podcast, because that's not going to help you. So this is here just to educate the people who it applies to. So I suppose the first topic I want to come into, and the first question, very simple, is what is credit?
Credit essentially is your ability to manage or borrow, utilize someone else's money. Essentially, that's what it is. Credit is money that's not your own, but you have access to it. And then, of course, what you've then got is a credit report, which is almost like a collation of your financial information and the relationships you hold with other companies on a financial basis. And then that is rated in a way that then determines what your credit score is. Credit score being like a universal indicator. So it works in the exact same way for everyone throughout the UK, but it's a universal indicator of all of that information within your credit report.
I've got a story for you, because
go for it.
Back in, I can't remember what year it was, maybe when I was around 19, 20, 21 years old, I used to do car rentals. And I feel like you probably already know where this is going to go right now. The mistake I made, I bought the car on my own personal name. And obviously I was renting out like that. Long story short, at the time I didn't really necessarily care about credit or think about that far in the future. So I was just like, yeah, cool, we get a ticket, it is what it is.
Yeah.
I ended up getting 3 CCJs. So
no way.
Yeah, 3 CCJs.
Yeah.
A whole lot of obviously parking tickets and all that sort of stuff that was paid off. But the main thing was CCJs. At the time, I did not care about CCJs. I did not think it was anything deep. I was just like, this ain't gonna affect me. I could not care less.
Yeah.
Until when I started working and I realized I need a phone contract. They did not give me a phone contract. It was lucky that I used to work in Carrefour warehouse at that time as well, to the point where I could pull a few strings and get something sorted.
Yeah.
But I think, correct me if I'm wrong, CCJ stays on your name even if it's cleared for 6 years?
Correct.
Okay.
So everything in regards to credit history, credit reporting is 6 years. So I usually tell clients the 626 rule, which is kind of what I came up with to make it simple. So everything within the last 6 months has the most impact on the score. Everything within 2 years is a lot of the time what anyone looking at your credit report takes into consideration. And 6 years is what anything that is being recorded on your credit report remains there for. And that is from the date that either an account is opened or an account is closed, and including CCJs, CFAS markers, for example, defaults. They're definitely recorded for at least 6 years.
I know we may have already covered it in the answers as well, but why is it that credit score is important? Because I'm trying to look at it from access point of view, what you can get with it. So if we just had to list a couple of things or assets that you can obtain by having a good credit score, what would it be?
I think if we take the first and the priority for a lot of my clients, which a lot of people don't appreciate, is being able to rent. At the end of the day, you're borrowing someone else's property for a period of time. They want to know that you're going to be financially responsible in paying them their rent on time.
So it's not even a case of having to get a mortgage.
It's not even just about, it's not even about borrowing money. It's literally just about you being responsible with other people's assets or money. So renting usually is a lot of the time where people struggle if they do have a CCJ defaults, for example, then they have to get guarantors, and it just becomes a lot more complex and complicated. On a basic level, you said it yourself, phone bills, it can be, for example, broadband, anything that involves you either paying something down over a period of time. It doesn't always have to be something significant like a mortgage. It can just be the day-to-day things. Like I said, taking something out on finance, middle of the road, let's say credit cards, car finance, for example. Yeah. But yeah, even basic stuff, it can definitely impact you.
Let's come more into the credit side in a bit, because I want to understand more of who you are, Ella. Because we mentioned before, we were speaking about before, that you were into marketing before.
Yeah.
And then you got into credit within 2020, I think it was roughly around that time?
Yeah, about 2021, yeah.
What was it about credit or that sort of financial infrastructure that made you want to get into it in the first place? Because it's not something that just falls upon someone. It's an active choice to pursue.
You're right. Why? So in fairness, I had a relationship with credit myself, very, very similar to you. So I used to work for Orange. So before they even became
T-Mobile,
exactly. T-Mobile and Orange when they merged. So I used to work for Orange and had a company contract with them, which at the time is free. Anyway, left the company, was going to university. As a result, had like a final bill, which probably, in all honesty, was maybe like £10 or something.
From Orange.
I don't even know what it was for. The letter came through, was living at home with my parents, and I just thought, this is irrelevant. As you do when you're like 18, 19 years old, you just think it's not important. And very naively, I thought, if I don't open the post or if I don't respond, they won't know because I haven't replied to them. So
that's exactly
they will never know that I've read the letter. Do you know what I mean? Yeah, exact same thing. Default on my account, lasted for 6 years. All of my other friends were getting car finance and etc. And I was like the last one because I had to wait for this default to drop off.
Yeah.
So during those 6 years, And again, working for Orange, I was aware of credit reports because obviously having done the contracts for other people, getting out phone contracts and etc. I was a little bit clued up, and I made a vow to myself and I said, never again. I'm never falling into this situation again. So I already had a lot of information about credit specifically. Falling into finance was after I had my son. So I was in marketing, took some time off maternity leave, was self-employed, contracting, freelancing, and then someone came to me and was like, hey, you'd be good at this, why don't you just give it a go? In all honesty, I just thought, oh, insurance is an extra service I can offer my clients. I was even thinking from a business insurance perspective, public liability, professional indemnity. That's what I was thinking. And then in all honesty, the minute I got into it, I just thoroughly enjoyed it. And I love to find a space where people don't appreciate either A, how valuable it is, or the lack of information that's readily available. And to be honest, it was at the time of lockdown as well. No one was really creating content online at that time, or everyone was creating content online, but specifically for finance, it was a gap that I was able to fall into. And I just thought insurance and credit, they two went hand in hand with each other. There were two things that applied to everyone pretty much every day. I had personal experience with it. I realized how much people underestimated how valuable it was, and I just ran with it.
Oh, fairs. Okay, interesting. And then how did it take you from there in terms of career-wise?
Career-wise, so insurance, I've just been running with it ever since. So like I said, with previous brokers that I've been working at, always been like one of the leading female performers in the company, like top 10, top 5, and we're talking out of like, say, 600. Developing a client portfolio as well. I'm quite lucky in the sense of utilizing lockdown and people recognizing information online. I continued that. So I've always been able to leverage the content that I create to not only educate people, but then turn them into clients at the same time, which also then means that they're quite loyal. So if I've ever moved between brokers or whatever that is, they followed me. And then in terms of credit, same sort of thing, just kind of started running with it, offering clients one-to-ones. And then based on all of that information, last year, BBC One Extra awarded me the Founding Figures Award as being like the most contribution that you've made to your community with the work that you've done. So I guess that's where it's kind of taken me in terms of my biggest achievement.
Yeah, no, you're definitely helping a lot of people with the free value that you're putting out in terms of the content, because it's all educational. And as I said in the beginning, it's something that's going to help everyone, regardless of what stage you are in life. You tell me then, what topic do you want to start off on? What's more passionate for you, credit or insurance?
It's a hard one to say which one is more passionate. I think, that's a hard one. No one's ever asked me that, which one am I more passionate about? I think insurance definitely can tug at your heartstrings in terms of if it goes wrong. So I would say I have a more emotional tie to insurance, but from an educational perspective, credit I favor out of the two.
Okay, cool. Well, let's start with the credit then, because I feel like it kind of goes in timeline order of someone's life as well.
Exactly.
So coming to it, this is going to be also very educational for me as well, because I'm trying to think. I don't have any form of credit, I believe. I have a credit card, but that's just purely for deposits on cars and stuff like that, if you're renting them. Other than that, I tend to say, I'm trying to make this not sound political or in a religious point of view, but I don't do credit or
makes sense,
interest or anything like that. So even then, that being said, do you think credit is needed for everyone?
No, I don't think credit is needed for everyone in terms of being able to get ahead and having to use other people's money. But like I said, if you think about it, even from a rental perspective, credit's needed, or a credit report and a credit score is definitely needed. And you need it to be in somewhat good standing in order for people to trust you. And I think that's the thing as well. People take it for granted. It can even come down to, for example, car insurance at the end of the day. So you're saying you don't use a lot of credit, but at the end of the day, in order for you to be insured, brilliant if you're able to pay it out or pay it off in one go, excellent. But a lot of the time, they're still going to run a credit check without you even realizing, just to see if they are in a position to offer you that option by being able to pay it in installments. So a lot of the time, people take it for granted. Is it 100% mandatory and necessary to get ahead by using other people's money? No. But there's a lot of things that are going to be credit dependent that people will need.
Is it true that whenever someone runs a credit check on you, it reduces your credit score?
Absolutely not.
Okay, so that's a myth that's always been told throughout my whole life.
Yeah, massive myth. So there's two types of searches when people have a look at your credit report. So say I'm the company, I'm a credit card or whatever, and I want to have a look at your credit report. If you go onto the typical search engine sites, so like moneysupermarket.com, Go Compare, etc., that is what is known as a soft search, because you're kind of seeing, you've put in your information and they're showing you what you're eligible for.
Yeah.
But it's a soft search because they're not going to show you what you're eligible for unless they've had a sneak peek, let's say, at your credit report.
Yeah.
So that doesn't show up to, say, someone else who might be a credit card company or car finance that's going to offer you credit. Hard searches now is an application. Just think of it as like that. Soft search, no one can see them. It's just having a sneak peek. Hard searches is you actually applying for the credit. And yes, the more hard searches, the more applications you make, the bigger the impact on your credit report.
Okay, so if we had to put this in a practical example, let's just take the Go Compare for credit cards, for example, right?
Cool.
So you put in your information, it's going to do a soft search on what credit card is going to loan you what amount.
Exactly.
Now, let's just say there's one American Express that's offering me £2,000 credit.
Yeah.
Once I then apply for that, now that's doing a hard search.
Correct.
Okay, interesting.
Yeah, if you have a look at Amex, if you have a look at British Airways, Barclaycard, NatWest, for example, and you're just kind of having a look at all of them soft searches, no one knows apart from you. But like you said, the minute you go to apply with Amex specifically or Barclaycard, that's now a hard search, that's an application. And what you don't want to happen, which a lot of people don't realize, especially with car finances, they might make an application to Amex, they might make an application to Barclaycard, and then in the end, maybe not go with either of them. Maybe they just wanted to see if they would be approved. But now those two searches are on your credit report. 3 months goes by, now they actually need credit for whatever reason. Let's just say it's car finance or whatever it is. Now someone is having a look at their credit report and they're going, oh, but they applied for this and they applied for this. And now 3 months later, they're applying for this. I can't see anywhere on their report an Amex account. So they definitely didn't open it. What happened? And this is the problem with credit reports. They don't really leave much open to explanation. They don't really provide any context.
Yeah.
So it's about companies kind of filling in the blanks. And the immediate assumption with many applications is you looked desperate, you needed credit, and something went wrong why you didn't get it. Okay.
Because I was going to ask the next question, which is why is it that a hard search affects you? But I'm assuming you pretty much just answered it in that question right there.
Yeah, literally, because it turns into an account, and the assumption is that you're then utilizing, or you've entered into that agreement or that relationship.
Yeah.
Like I said, there's no context or no explanation to explain why. They stay on your credit report for 12 months as well. So I usually say if anyone wants to make an application, try and group your applications together. I mean, it's quite common that if someone's moving home that they're going to make an application for the tenancy agreement, you know, their credit report is going to be searched there, and they might take out a contract for broadband. They might get some furniture on finance or whatever it may be. So a lot of the time, try and group the credit applications together. So then that way, when they drop off in 12 months, they all drop off together.
Okay. Makes sense. There's also something called a clear score, right?
Correct.
What's that?
So clear score is actually Equifax's version of the credit report. So we've got 3 credit referencing agencies here in the UK. We've actually got 4, but 3 are the most important. So we've got Experian, the one that everyone knows about. We've got Equifax, and then we've got TransUnion.
Yeah.
Each of those.
Literally on my notes as well. Yeah.
If you go directly to each 3 of those platforms, you'll have to pay in order to kind of see an in-depth, comprehensive version of your credit report.
Yeah.
If you go to ClearScore, it's the free version of Equifax.
Okay.
They've got it in the form of an app. They'll send you your report on a weekly basis. If you get any updates and etc., they'll send you an alert. For TransUnion now, you've got Credit Karma. And then if you want the free version of Experian, then you would go to the Money Saving Credit Club.
So, okay, just to unpack all of that there, just to identify what ClearScore is exactly.
Literally just Equifax's free version to access your credit report.
Okay, so someone once told me, and this is probably wrong now that I think about it, it was about how much income you're making per month.
Okay.
That's got nothing to do with ClearScore.
Not necessarily, no. It might be relevant in terms of an application, but no, ClearScore is literally Equifax's free version of the credit platform. So maybe they was making an application on ClearScore because they kind of act as brokers as well, which again, it means you can put in some information. They'll show you different offers on who you can get credit with. So maybe they was filling in that information based on their income to see what they would be offered. But
it's funny because Experian has given me so much trauma just by in that time when I had all the CCJ and stuff like that. I saw my credit score and I don't even want to repeat the number, but and then I got to a point where I was just like, I had to delete this app because it is literally affecting someone.
Yeah.
It's mental.
And I'll be honest as well, this is the problem. the majority of people that have negative emotions when associated with their credit report is between the ages of like 24 and 35, which if you think about it, that's kind of like when life is happening. Do you know what I mean?
Exactly.
Like career's on its way. We're making proper money now. You know, some of us might be entering into relationships where we get married. We might have children, might be buying a property.
Yeah.
And that is the demographic of people that are like, when it comes to your credit report, it's sad.
I'm literally on Experian right now. I'm going to try and pull it up to see what my score is or anything like that.
Okay, cool.
Okay, so while I do all of this, you tell me, what's the most simplest and easiest platform someone should use to really keep in track of their credit score?
For me personally, I'm going to say the platform is called Check My File.
Okay, so not even ones out of those big four that you listed.
No,
Okay,
a completely different
Why?
one. You know why? Because it's got all three of them in it.
Okay.
If you go to Experian, your score's going to be rated out of 999. If you go to TransUnion, I think it's 1,000. And if you go to Equifax, don't quote me on that one. If you go to Equifax, it's out of 750. So basically what I'm saying is the score is different on each platform. But each credit reporting agency is important. You don't want to miss one out because your information might show on one, might look a little bit different on the other one. And then this is when you might get upset when you get declined for credit and not know why.
Yeah.
So that's why I like Check My File, because literally when you log into Check My File, it shows you Experian, TransUnion and Equifax, but all in one place.
Yeah.
So you can't miss anything. So it's like the most comprehensive version of a credit report. The free versions are great. And if you're someone that doesn't want to pay for your credit report, then that's absolutely fine. Make sure that you've got access to all three of those apps or all three of those platforms. But for me, always number one is going to be Check My File.
Apart from credit searches, what else affects in a negative way someone's credit score?
Oh, okay. Biggest one is always going to be, the most negative is always going to be adverse credit. So that's going to be your missed payments, your county court judgments and your defaults. Those are going to be like
The hard hitters on it.
the hard hitters.
Yep.
Yeah.
And if you're me and you get 3, you're pissed.
yeah. Exactly. Just because, of course, those ones provide the assumption that, you know, a financial relationship went completely south. It went as wrong as it could because they had to proceed with some form of enforcement action to try and convince you to pay the money that you should have paid in the first place.
Yeah.
That's the assumption.
Okay, Fez. Is this working? Okay. All right, cool. This is improved from the last time I seen it. We're in here now. I'm just going to show you that.
Okay, cool. Okay. Right.
Okay.
Score up 30 points. 3 score impacts. Okay. Let's have a quick
Walk me
look
through
at
it.
the score.
In fact, we can talk about this publicly because
Okay, cool. So you've got
make
your
a
credit
difference in my
report
life.
that we're having a look at,
Yep.
of course, and then it's giving you your score. You said we can talk about the score?
Yeah.
Okay, so for Experian, they've got very poor, then they've got poor, then they have fair, then they have good, then they have excellent. Your score at the moment is classified as poor, with it being 638 out of 999. What you then want to have a look at is you want to have a look at the reports, and then that's when it will break everything down.
Okay.
So it's going to show you the credit cards that you've got. It's going to show you any other accounts that you've got. So like you said, you've got the credit card that you mentioned, and then it's got, for example, your Vodafone account.
Oh, does it say it on there as well?
Yeah.
Oh, okay.
It says as well that you made a hard search as of recent.
What did that come for?
So that hard search probably was related to the credit card that I'm
maybe.
having a look at. So that's what I mean in terms of you want your hard searches and your accounts to match up.
Yeah.
That makes sense now. No one's going to look at that and think, what did you apply for? They can see what you applied for. Main things as well it's going to give you is your personal information, name, date of birth, address, dates that accounts were opened and dates that accounts were closed. You kind of always want to check that information is correct. Reason being is because if you ever need to dispute at a later date or there's an issue, chances are going to need to provide some sort of proof. And if your name, your date of birth and your address is incorrect, how are you proving that you are who you say you are?
Yeah.
They don't mind. They're happy. They've got the account open believing that this person is who they say they are. So that's why you always want to make sure that information is correct. Again, you've got here 11 soft searches, but like I said, none of that matters. Then the next thing on there as well is credit utilization. So yours actually is brilliant because you've only got 6% use of your credit utilization.
So that backs the point of when I say I barely use credit.
Exactly.
Okay, cool.
Yeah. But
There's your proof, people.
but the good thing is the fact that the credit card is active. So the fact that there's a small balance on there or you're using it here and then, the credit card companies are happy.
Yeah,
At the end of the day, they're happy because it means that you're relying on them,
Yeah.
but you're still paying back and being responsible.
I was even offered a increased limit as well on the credit card too.
Excellent. So
Yeah.
I usually say to people, if they can have that, and again, this, like you said, is based on people's personal circumstances. If you're someone that's relying on your credit card at the moment, or you know that you've got impulse spending habits, or you feel like you're just not going to be responsible, have that ticked off. Let them let you know that they want to increase it, and you can accept or decline.
Yeah.
If you're someone that's in control, I would always have that ticked to automatically increase, because the more money that's available to you is always going to be a potential where you can see your score increase. Because if you're only spending £100 a month, but your credit available limit is 1,000, and then it becomes 2,000, and then it becomes 3,000, £100 of 3,000 is a lot less than £100 of 1,000.
Of course, yeah.
So that's why I usually say to people, have that automatically on there. And then other things that you're going to have on there is, for example, public information. That's usually going to be your county court judgments. Or, for example, if then you need to make any corrections. This is something that I usually don't advise, dependent on circumstances. But corrections is, for example, say something's gone wrong with an account. The address wasn't updated. Maybe they made an error or something. You can put on there what is known as a notice of correction.
Okay.
This can be good in some circumstances, because if there's something really significant or negative on your account and you want to provide context and explanation, which, like I said, credit reports don't do, that forces anyone looking at your credit report to read that notice.
Yeah.
The problem is, though, you can't ever receive an automatic decision online when applying for credit, because it requires not a computer and someone to read it. Which means that whenever you make an application, it's always going to be refer, because they want someone to read that information. So it's good in some sense, in some circumstances, bad in others. In my role, where I appeal a lot of defaults and CCJs for clients, I always say better to just try and appeal it and negotiate where you can than put on a notice of correction.
Okay. Does it still say CCJs on there or anything?
It does. So you've got 2 on here from 2023, and probably having a look at them.
2023? Hold on, wait.
And probably having a look at them automatically. If I have a look and the value is at like 200, yep, there we go. So we've got 2 CCJs on there in and around the value of £200 and £300, and I can bet you £500 a day they're parking tickets.
Probably, maybe. I'm not even sure. So they were issued in 2023.
Yeah.
So that means I've got a new set of CCJs.
Yeah.
Shit. There's even more reason to go to the buy now, isn't it?
And you know what's probably happened? You've probably fallen into that trap that 90% of all other CCJs that are issued by default, which means that maybe a claim letter came through, maybe it didn't because they had the wrong address or whatever, and ultimately a judgment was entered in default. So just automatically, because they didn't have a response from you, and 90% of CCJs are entered that way.
Do you know what was a big misconception, or it might be a misconception, or this was a big theory back in the day, especially around East London, is that people used to say private parking, they're not going to chase up.
Yeah.
They're not going to do nothing. So whenever a private parking, I'm just looking it back in my memories, whenever a private parking notice would come through,
you just ignore it.
Ignore it. Let them keep increasing the prices. Let them try and scare you and stuff like that.
Yeah.
Until one day when I realised, oh wait, hold on, they put a CCJ on me.
Yeah, they're scaring. They're scaring people. Yeah, so they're the worst.
So here's a good question, follow up from that.
Yeah.
Can any company that deals with credit or anything like that put or issue a CCJ on someone's name?
Absolutely.
Okay, so anyone could do it.
If you are in a position to prove that someone owes you money, literally in this situation right now, if I'm in a position to draft a contract, let's say, go to the courts and say, Raheem was supposed to pay me £100 on the 1st of August, 2022, and he didn't. This is the steps that I took to try and recover the money, and he didn't follow through. If I pay the money to the courts, they'll then file a county court judgment for me, or they'll certainly file a claim that they will want you to respond to and defend yourself. But like I said, 90% of people don't, and then it enters into a default judgment.
So CCJs, you can clear off your name because you can just simply pay it off, right?
Correct. But the thing is, so it still stays on your report for 6 years.
Yeah.
It just gets marked as satisfied.
Exactly that, yeah.
If you've paid it.
So what difference does that make to someone when they're doing a credit search or something like that?
So satisfied definitely shows you to be more responsible. It means that, yes, you acknowledge that you had the debt, but you've paid the debt. The fact that it got that far is still taken into consideration. So if we consider the biggest, like I said, application for credit, i.e. being mortgages, can you get a mortgage with a CCJ? Absolutely. Yes, you can. But mortgage lenders, for example, have brackets in terms of what they consider. So they will have, bracket A is mispayments, bracket B is specifically credit card defaults, and bracket C, for example, is CCJs, and then they'll have the months. So if it's A, but in the last 12 months, it's all right.
Yeah.
But if it's like bracket C and it's in the last, say, 6 months, for example, that's like a massive cause for concern. So it's not to say that you can't get credit. It's not to say that you can't even get a mortgage, but it definitely plays a part. And then it's just it's just the weighting. So if you've paid off a CCJ, the weight is a little bit less, but it's still considered at the end of the day.
So now we've covered, I suppose, what affects it. What can people do to recover it? How does someone, I mean, like I said, my credit score was probably once upon a time within the hundreds, 200 mark. It was terrible. I never done anything in particular to try and recover it.
Yeah.
And even now, I don't necessarily actively do anything to try and recover it. But let's just say someone is in that position where they really want to get their credit score up because they want to either get a car on finance or they want to finally get a mortgage, whatever the case may be. How can someone impact their credit score in a good way?
I think apart from the basic things, go for it. Apart from the basic things, which is checking your report, information being correct, and etc. One of the easiest things, to be honest, is being registered on the electoral roll. Bottom line is, if someone's going to give you access to their assets or their money, they want to know where they can find you if they need you to pay them back. And the electoral roll does that. A lot of the times though, people opt out or don't register on the electoral roll because they assume it means that their name and address or whatever is then on the open register, and you can opt out of that. So you can be registered on the electoral roll but opt out of the open register. So that means I can't just pay and type in Raheem's name and date of birth and try and find wherever you're located, but you're still registered in a way where other companies can find you. So that's usually a big one. Second one, I'll give like the top three. Second one being credit utilization, just trying to bring that down. If you're actively spending on your credit card at the moment where you've developed a bit of debt, try and get it down to 40%. That'd be your first target. 40% because it's a safe space. It means that you're not relying on credit, but you're actively using it. You'll definitely see a big difference between your score with someone who's got 70% utilization and someone who's got 40% utilization. But if you're 40% and below, just try and keep it as close to zero as possible. And then the third one is appealing any adverse credit. So if you've got a default or a CCJ, even a missed payment, to be fair, have a conversation with the company. Companies have a duty and an obligation to report on the credit referencing agencies factually, accurately or honestly and fairly. Now, of course, the fairly is where discretion comes into play, because bottom line is, if you're supposed to make a payment on the 1st of the month and you make it on the 3rd, then it's accurate or it's factual that you missed a payment. But is it fair if, for example, their system was down? Is that entirely factual? Is that entirely accurate that you missed a payment? Not necessarily. If it's causing you significant harm, for example, that missed payment being on your credit report, let's just say you're about to be homeless, your mortgage was about to go through, now it's fallen through because you've got discretion can be used. So that's why I always say appeal regardless. CCJs, like I said, 90% of them are default judgments. A lot of them are car parking tickets. A lot of the time with private lands, it means that the parking ticket isn't justified as well. As a whole nother ball game though, however. So definitely appeal it wherever you can. And the same with defaults. There are strict processes that have to be followed in order for someone to serve you with a county court judgment or a default. And a lot of the time the companies don't follow these processes, meaning that there's an element that you can potentially trip them up on and say, well, I didn't get this or this didn't happen. And then it can be reversed.
Oh, fairs. Here's some myth busting bits that we got down that we need to get through. And you kind of mentioned one already. Paying off debt instantly fixes credit. Now, I'm not going to, there's the term fixing credit there. However, I'm going to also go into a bit more further like this, because I have loads of friends who say, just get an Amex, you'll get the points. You just get something in your credit card, pay it off there and then. Does that impact your credit score in any way?
So your credit score,
in a good way, should we say? Yeah,
to be fair, pros and cons to that. Your credit report or your credit score, let's say, is updated on a monthly basis. Some companies are a little bit delayed, so you might see an update 60 days ago, but ultimately it's updated on a monthly basis. So the reality is, if you're carrying a balance of say £500 and you pay it off and it's then updated the following month, you're going to see your score increase because you no longer owe that money. So in the short, yes. But that's why I say not necessarily, because for someone, paying off their credit might not always be feasible, or a new application might not always be feasible. So it's still based on the personal circumstances.
Next one. Having no debt equals great credit. Not
necessarily. Bottom line is, I can see people who have 0 credit accounts and think that because they've got a 999 score on Experian, and then have people who have got, say, 2 credit cards, catalog, for example, maybe even a default or whatever, sometimes those people can actually be approved for more credit than the person who's got none.
Interesting.
Reason being is there's no footprint. There's nothing to base it off. How can I know whether to lend you money if I've got no record of you borrowing other people's money and paying it back on time?
Yeah.
So the myth of having 0 credit means that you're in the best position? No. And the easiest way to check that out is a lot of the time if you've got any young individual, because your credit report can exist the minute there's any information to report at the end of the day. So like I said, being registered on the electoral roll. So a 15-year-old, chances are, is going to have a credit score that is at the absolute bottom because there's no credit to base it on, versus someone who's 21, 31, 41 and they've got a bigger
history
credit
behind them. Yeah.
Exactly.
Next one. Earning more money guarantees loan approval.
Absolutely not.
Why not?
Because just because you make more money than me doesn't mean that you manage your money better than me. And I think that's probably the biggest issue for people. People, associate that having a brilliant credit score means that they've got loads of money. It doesn't, because it's all based on how you manage your finances. And I always say to people, show me your credit report and I know exactly what's going on with your finances. If I see missed payments, defaults, etc., I can read what's going on with your finances and your accounts, literally to a T. But someone who's earning 100k a year or is banking, say 5-6k a month, but is spending 5.5k a month, they're in dangerous waters. Someone might be earning a 30k salary, bringing home 1,900 a month and only spending 500. They're in a much more powerful position, even though they earn far less.
Let's talk about the future of credit, because I think this is where things get interesting, because in recent years, I'll say within the last 10, we've had things pop up such as, and these are things that anyone can access really when it comes to it. Klarna, for example, buy now, pay later, or even Monzo doing it now as well, to be fair.
Yep.
How is that changing the landscape of credit?
It's changing the landscape in the sense of credit being far more accessible. However, I do think, because every company in regards to credit does have to report to the FCA, being the Financial Conduct Authority, and the FCA are definitely clamping down more. It's just the time frame between when these companies go active or introduce their service and when that happens. So like you said, we saw the introduction of Klarna, but that's unregulated credit.
Oh, is it? Okay.
It's completely unregulated. So what that means is there's no income and expenditure that's put in place to see if whether giving someone the ability to spend £1,500 on Klarna is affordable for them. So that's what we classify as unregulated. And originally before, what people weren't appreciating is if that they weren't paying Klarna back on time, they didn't realize, because they assumed it was completely unregulated, that it wasn't going to show up on their credit report. Klarna shows up on your credit report.
Oh, it does, yeah?
Yeah. And the same with PayPal, paying 1 or paying 3, for example, shows up on your credit report. And the same with the Monzo, what's it called now? The split payments that Monzo have now started doing.
Yeah, I can't remember what it's called, but I know exactly what you're talking about,
Yeah. Shows up on your credit report. So all of that is showing up now because ultimately they want to be able to show other people how responsible you are. So whilst it's being reported, people just aren't realizing at the time that, I've got complete accessibility to this. I haven't had to fill in any forms, sign any waivers or etc. All I've been able to do is literally say I need it, and it's been thrown at them. They're then thinking that there's not going to then be any consequences, potentially the other end.
If I make a statement here and say those services are dangerous, what's your opinion towards that?
I agree.
Why?
I agree, absolutely. Like I said, if they're unregulated, it means that they're not taking the individual into consideration. Same thing goes for your credit report. It doesn't take you as an individual into consideration. So there's no explanation. There's no, this person lost their job and that's why they missed a payment, but they're about to start a new job in 6 weeks. So ignore this missed payment because it wasn't their fault. There's no explanation. If credit's unregulated, there's no, okay, but 6 years ago, you did this, and what is it that you're using Klarna for? Is it for Uber Eats, for example, or is it to shop at H&M, or is it to fund a business that really and truly you've got no business funding because we know potentially it's going to go south, or you haven't even bothered to write a business plan? Whatever it may be, it's not taking the circumstances that need to be considered into account. So definitely do I think it's dangerous. And like when I was saying that finances and emotion go hand in hand, a lot of people do things with their finance because it's fueling something else. So either a dopamine fix, or because they want to impress people, or because they want to get out of a difficult situation. Yeah. And actually the decisions to take advantage of that credit aren't always logical.
That's what I'm saying. That's why I think it's dangerous, because they're so easily accessible and anyone can do it. I have the theory of that, the people, once they've got you in their credit hands and you owe them money, that's where, you know, you can really mess up.
I completely agree.
Going ahead in the future.
It's even down to the finance apps, and I'm not going to name them because I'll probably get cancelled by them. But it's even down to the finance apps. A lot of clients will come to me and they'll say, oh, I use this app to manage my money and etc. Brilliant. Check your junk, check your emails. A lot of the times those finance apps are pumping you with, you've got access to this. You've got access to this. Why didn't you consider a 0% balance transfer, which can be good in some circumstances, but again, not if you necessarily need to be applying for credit in, say, a couple of months or something. So they're just throwing things at you based on what it says in your credit report, but that still doesn't take you as the person into consideration. So yeah, I completely agree.
Do you deal with businesses as well when it comes to credit?
Yeah. So like I said, the client that I'm dealing with at the moment with a large CCJ, that's actually a CCJ for their business.
Okay, so everything we've discussed so far in the past half hour for this podcast, how much of it is applicable to businesses?
All of it.
It's the exact same.
To be honest, the reality is that a lot of the time business credit is based on your personal credit.
Really?
Yeah. It's only until you've developed a footprint as being a business and having business credit that they will then base it on solely the business. So for example, if you've got CEOCAST, let's say, and you've never borrowed any money, they're going to take Raheem into consideration. But then as
what's Raheem like?
Exactly. But then as CEOCAST develops, let's just say they borrowed the first bit of credit based on Raheem, then companies can then say, oh, okay, well, CEOCAST has been paying back responsibly over the past 12 months, 24 months, and then they can base it more on the company as opposed to the individual.
Makes sense. I suppose this is the point where we're coming to insurance now, because that's all credit kind of covered, am I right? Or is there anything else to note on credit?
I would say so, not necessarily. I think we covered the sort of main things that would impact credit. I think if anyone wants to know whether they can appeal negative decisions, like I said, definitely defaults are tricky, but they can be, like I said, make sure that the companies have followed a correct process. CCJs, I'll help you with yours, but definitely the application that people want to have a look at is a N244. So it's a form that basically you can fill in and send over to the courts, and it means that they'll look into the case, they'll look into the application to have the judgment. It's called set aside, but in layman terms, let's just say it's removed from your credit report. I would encourage everyone to go down that route, just for the simple fact that if you win the case, then excellent, the CCJ is removed. Because 6 years can be a long time.
It is a long time, yeah. It is a long time. I mean, I don't plan to stay here for 6 years anyway, so I'm not sure how
exactly,
that's going to too much affect me. But insurance is an interesting thing, because now for the people who listen to this, they're going to take action on all these things. They're going to get the credit they need. They may buy assets with the credit, i.e. houses, property, cars, whatever the case may be. And now the insurance side comes into it. Because you need to protect all of that.
Correct.
So where should we start talking about with insurance?
For me, when talking about insurance, number one is always income protection. Other advisors might say life insurance or critical illness or etc. For me, it's income protection, because bottom line is you are your biggest asset and your ability to earn is your biggest skill, essentially. So if you're too sick to be able to work and therefore earn your income, you want to have income protection to fall back on. Of course, if you've got multiple savings and etc., it might not be necessary. But I always say, if you've got the choice between spending your £7,000 of savings that you've just...
Don't touch that. Sorry.
If you've got the choice between spending your £7,000 of hard-earned savings in order to support you over the next couple of months because you're out of work, or taking advantage of your income protection policy, which you probably might, and again, it varies from person to person, I can't quote, but which might cost you in and around, say, £30 a month. Claim on the income protection. It's a bit of a no-brainer. So for me, income protection is always number one.
Can anyone get income protection?
Absolutely.
Employee or business owner?
Absolutely.
Okay.
Yeah.
Interesting. How did they get it?
So you would go through income protection. You'd go through an advisor. So someone like myself, they would kind of do a fact find, understand your circumstances, and then understand what type of income protection is best for you.
Yeah.
You've got the biggest question I'm always asked is, can I get income protection if I'm self-employed? I'm self-employed. 100% you can. And if you're a limited company owner, yes, you can have your income protection paid for by your business. So it's then a tax deductible expense. And even more so if you've got employees, those employees might, carry out a significant role within your business that if they went off sick, you're going to have loss in earnings or loss of profits. So can you take out income protection for them? Absolutely.
Interesting. Okay, and then what else for insurance?
Next one.
I think people automatically assume insurance is something to do with protecting an asset.
Exactly.
That's just my take on it.
Yeah.
Whether it be car insurance, whether it be home insurance or life insurance. Those are the top three that come to my head instantly. But I mean, I didn't even know there was a thing, income protection. Do you know what I mean?
Yeah, and most people don't, actually. Most people don't. And I think out of everyone that's self-employed in the UK, there's only about 4% of those who are registered as self-employed that even have income protection. So you're right. You're not alone in terms of assuming what is that, essentially. Yeah.
Okay. And then what's next after that?
I think next on my list would be life insurance. Reason being is because if you have an asset, you've worked hard for that asset, you don't want it to just disappear in the event of you passing. You want it to be paid off in full. We also want to do the responsible thing of not allowing debt to be carried over, or our debt to be carried over to someone else. So for me, it's definitely going to be life insurance. As a homeowner myself, and I work with a lot of property owners, property entrepreneurs, let's say, that for me is next on the list.
When you see it from your perspective, do you think people just walk through life willy-nilly and just, what's the word?
Just blasé.
Blasé. And they don't care about protection or insurance or none of that stuff.
Absolutely. A lot of the time, I've had conversation with clients and they've said, oh yeah, I've got my property, but you know, if I die tomorrow and the property goes to the government, oh well. But when you then hear that the government has like billions of pounds worth of unpaid assets, and when I say unpaid as in assets that haven't been inherited by someone. Yeah, why?
So
we've already paid our taxes. We've already paid stamp duty. There might have been capital gains on certain other properties or whatever. So bottom line is we've paid tax on being able to buy something. And then if you pass away, it's supposed to just disappear? No.
I'm interested to know, do you think, or you see it, is there a pattern between people who have kids and people who don't? Because you may be looking at it in a perspective of, if I have kids, I'm 100% going to get life insurance or something.
Because you want to be responsible for them.
I want to be responsible for them, and I want to make sure that they get the right inheritance and everything like that, and it doesn't just go automatically back to the government. You know? So do you ever notice that pattern? I would say
you're right. A lot of my clients come to me at sort of 3 pivotal moments. So either career change, life change, and I say like getting married or etc., or buying a home, or they've already bought a home and then they want to insure it. I would definitely say those who don't have children, their priority is always their income, but they're also at a point where they're trying to build on something. It's very rare that I have someone that just comes to me and is like, yeah, you know, I'm taking home, say, £3,000 a month, let's say, and I've got £10,000 saved and I just want to ensure my income just in case. It's very rare that someone wants to be that proactive. It's usually someone saying, yeah, I've got money saved, but it's for this. And they're just trying to make sure that they're not in any sort of dire circumstances possible, or someone who's been in that situation and never wants to go back there again. So it's definitely those who are more responsible and are also thinking long term. Like at the end of the day, they're thinking, yeah, I might be good today, but what about in 5 years or 10 years? Because that's another thing. The sooner you get insurance, the better. It's always more cost effective.
Yeah, no, this is why I thought this episode would be wicked. The second you mentioned it the other day, I was like, this is perfect because we've done an episode with, I'm not sure if you've seen it, with an accountant, Joshua Thomas.
I love him.
He's a wicked guy. Brilliant. And that podcast is so informative. Then I've done another episode, which is all about, I suppose, building wealth and how to manage wealth and how the rich use wealth to get wealth. And now this one where it's almost, we're talking about all stages really, because it applies to everyone: credit, insurance, and so on and so forth. So yeah, very, very interesting. What else would you want to say?
I would say, I think for anyone maybe watching the episode is maybe just to sort of take stock of their situation and kind of make a decision on where they want to be, irrespective of what their circumstances are. You know, in an ideal situation, I want to be here and I want to have this, and start looking into all of the steps that are fundamental to securing that, protecting that, or achieving that. A lot of the time, either credit or insurance is going to pop up somewhere. And I know you've probably got a lot of Muslim followers as well. I've got clients where we put in place policies that are Sharia compliant. There's a specific type of policy. So that's why I say as well, don't be confused of what you think you know, what myths you've heard, and think that they're accurate. They're not. Bottom line is there's something available to everyone. If it's credit, something can be appealed, something can be removed, something can be improved, let's say. And if it's insurance, there's definitely a policy available for everyone. And just don't underestimate how valuable or how important they are at any point in your life.
Yeah, there's something that can always be done.
Absolutely.
There's something that always can be done. Well, Ella, let's imagine this, for example. Actually, no, I have one last note to ask you, maybe have a topic around.
Okay.
You ever taken the interest of AI?
Yeah, I like AI.
And the reason why I asked this is because I was having a conversation with my guest yesterday.
Yeah.
And how AI is changing industries. Do you see AI changing the industry or helping it, or Is it going to be a dangerous thing for what you do?
I'm not sure how dangerous it will be for myself at this stage, just because of the level of compliance that is involved, and the level of compliance that the FCA basically put in place when it comes to advisors and etc. So I wouldn't say that from that perspective, a financial advisor or a financial consultant is entirely at risk. The reason why I say that is because AI isn't emotional.
I was going to say, I feel like a lot of what you do involves human interaction.
Exactly. So yes, you can put together a framework of someone's circumstances and then put it into AI, and AI can say, well, based on this information, they need this, this, and this.
Yeah.
And you might then have a counter and say, oh yeah, but they've only got a budget of X. Provide me with something else, and AI will come up with a solution. But it doesn't take into consideration someone who might have lost a friend at the age of 18 and wants to make sure the same thing doesn't happen to them. It might not take into consideration someone who literally has panic attacks at looking at their credit report and, has the fear of, bottom line, enforcement agents turning up to their house because they're coming after them for a county court claim, or, all of those sorts of things. Or someone who wants to get a property, but they've just heard from elsewhere, oh, this myth, and thinking that they're never going to be able to. So is there a possibility that it's going to play a massive role? 100%. And I use AI, bottom line is, as a self-employed individual running my business. Yeah, it can lessen the load. It can make things more convenient. But yeah, like you said, it can't replace emotion.
Yeah. Well, Ella, let's imagine this. Let's just imagine that all your pieces of content online are taken down. There's nothing to be seen, right? Yeah. No Instagram page, no YouTube videos, nothing like that. And this is the only podcast they've got. To end it off, for the last thing I want to ask you is, if there's 3 lessons or 3 things that you live by, what would it be?
3 things that I live by is always trying to be the best version of yourself. Integrity being number 2, and that plays a massive role in finances as well. And then the third thing is that resilience isn't always like the best thing, or isn't always a badge of honor. 9 times out of 10, when people are being resilient, it means that they're living in autopilot. They're just, I'm just getting by because I've got to, and that plays a big part into finance as well. Oh, it's fine, I'll just get by, and oh, it's this. And a lot of the time you're not living life to your full potential because of that. So yeah, definitely being the best that you can be, integrity and resilience isn't always a badge of honor.
That's it. Love it. Well, Ella, I'm sure there's going to be a lot of people who want to follow you right now, and this podcast wasn't enough for them. So they constantly want to find your socials and see what spots. So drop your socials.
Okay, cool. So on all social media platforms, TikTok, Instagram, and LinkedIn, actually, to be fair, it's Ella Insures, ELLAENSURES.
And I'm assuming we're going to see more of your personal branding stuff popping up now as well.
Yeah, definitely. I used to do a lot more before, but now doing credit and insurance combined and building the business, there's a lot to come. There's a lot to come.
Well, socials is the forefront of all of it. So
exactly.
Yeah, we've got to get back on it.
Yeah.
Well, Ella, I want to thank you very, very much for coming on this episode and educating not just the audience, but also myself as well, because there's a lot of things I didn't know.
Yeah.
So thank you very much. For people who are watching right now, if you enjoyed this episode, make sure you can check out this episode, because you might also enjoy that as well. And I'll catch you lot on the next episode next Sunday. Peace.